To begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone. Today is Thursday, September 12th, and it's another week of CFRN Thursday, where we go over the CFRN trade setup in slow motion. Okay, so every Thursday we pop in here for an hour, and what I'll do is I'll go over the trade setup that CFRN, their methodology, what they're using inside the training room. And so what I'll end up doing is I'll end up breaking it down. So if you're on the trial, or if you are brand new, this is a good cheat sheet or a good syllabus to lean on. So we'll cover that in the beginning, and then what I'm going to do then is go into a live market and look for those same setups. And I'm going to go inside the DOM here. Let me get my marker out. Okay, we'll get into the tower here. This is the depth of market. And what I'll end up doing is I'll show you how to get long, get short, how to trail your stop, that kind of thing. So I'll show you from start to finish on executing trades based on their methodology. Okay, so before I get started, let me minimize that and that. Before I get started, what I'm going to do is go over the disclaimers. There's two of them that I have to go over before I present, so I'll tackle those first. Then, like I said, we'll go into the setup, and then we'll hop into a live market. Okay. If you are already a CFRN member, this is going to be a good time for you to ask questions. I'm going to hammer on a few topics, some of the common traps that people fall into if they're spinning their wheels. You'll hear me hammer those over and over and over again. And the goal of that is hopefully some of that will stick with you. And then if you run into that in the course of a trading day, you kind of remember that and say, that's something that Bert talked about. Maybe I should avoid that, or sit on my hands. So the idea is to open your eyes a little bit to some of the traps that people fall into, so you, in the end, don't make those same ones. And like I said, the guys that are brand new, this is, again, this is an eyes wide open approach. You'll get a chance to see what the indicators are about. And then when you're in the training room, at least you'll be able to absorb what's going on. When Michael's in the room, he's in there for 2 hours, and he's got a goal, and he's got an audience, and so sometimes he's busy, and he'll go fast, and that seems to be a common feedback that we get from people. So this is an opportunity for me to kind of slow things down in first gear and say, all right, you have questions, here's a great time to do it. And I'm going to go over the same buzzwords and some of the things you'll hear in the training room, so when they pop up, you're not going to be surprised. Okay. What you're staring at right now is the DtPro Trading Platform. The indicators are built inside the platform. They're also available on Ninja. So I support this platform here. And Michael and Dwayne use the same platform. So if in the end, if you're having a problem downloading the platform or getting the indicators downloaded, the difference between us and Ninja is that all you have to do is call the desk here, and I'll pick up and I'll walk you through it. So you'll be talking to a live body, and that's comforting if you're going to make a commitment and learn how to trade. And it's just nice to know that the person on the other end that's answering the phone knows what the heck you're doing, what you're looking at, and knows the trade setup. So that being said, let's just get into. Let me get rid of the marker now. Get into the disclaimers. And if you've been in here before, this is a great time for you to get coffee. If I see a lot of common names in here. So the guys that are always in here, if you want to get a cup of coffee or something, that's fine. But what I don't like to do is I don't like to just throw this up and say, hey, take 2 seconds to look at it and then put it back under the blanket. Because like I said earlier, this is about being an eyes wide open approach, and it starts with the risk associated with trading, right? So we might as well talk about it. And I've been doing this for almost 25 years, so I've really seen the good, the bad, and ugly when it comes to this. So I don't take it lightly, so that's why I circled it. I put a little star next to it because basically this is a stamp for those guys that are brand new to trading. Okay, the guys that usually, my experience with CFRN is the guys that get to the CFRN door, they've been to this guy and that guy and this guy and this guy, and they're beaten up. So they're numb to the disclaimer. The disclaimer really is for those guys that are brand spanking new. Okay, the idea is a few things. Number one, you can lose everything. It's a leverage market, right? You all know that. So if you're not using stop losses, if you don't have a trading plan, if you're not engaged in the marketplace, if you're not looking over your trading account, if you're not in tune with what maybe the market news is for the day, this disclaimer is going to hit you right smack dab in the face. Okay. So the good thing is, if you are exploring this path, we are going to talk about a set of rules, right? So we are going to have a trading plan. There's basically 4 rules here. Okay, so you are going to have a trading plan if you decide to go down the CFRN path. Every trade has an 8-tick stop attached to it, right? So you got that box checked, right? You're on a 4-tick range chart, so you're looking at the market under a microscope. So you're going to have to be actively engaged in the marketplace, and you got rules to follow. So you really got to be watching what's going on, right? One of the rule sets with CFRN is they don't trade around news reports. Okay, well then every morning part of your game plan is going to be what are the reports for the day. So you'll be in tune with what's going on. Okay, so learning to trade the CFRN method, you are going to check a lot of those boxes that, that this disclaimer that can, like I said, hit you right in the gut if you're not paying attention. Okay? So in the end, does that mean, hey, your risk is, hey, if I go down the CFRN path, this disclaimer doesn't apply to me? No, it does. The idea is, in the end, if you're doing all the right things, you have a plan, you have a stop loss, you're in front of the screens, you're in front of the markets, you're in tune with all the news items, reports. The bottom line is, if something does come out and comes out real bad, there is a chance that if you do place a stop loss, that your stop loss may get hopped and not get elected. That would mean, in the end, you'd still have risk on the table, you'd have a position on. And positive to that is that since you're going to be in front of the screens, you'll be in a position really to take action, which is you'll be inside the tower. You'll be able to hit that exit at market and cancel button and get the heck out of Dodge. You can get out of the position, take a deep breath, and say, what the heck just happened? Okay? That is the worst case scenario. I think in my 25 years, my 25 years, I've seen it maybe a handful of times. Electronic, we haven't been trading we haven't been trading on the screens for 25 years, but the fact is, I've seen it a handful of times. So it doesn't happen often, but when it does, you have to be aware of the risks, and that's why we're talking about it. It also says here too that the risk capital in your trading account, the funds that are in your trading account should be risk capital. It could be funds that you can afford to lose. It's not going to change your lifestyle. Okay. Also, this one that's highlighted in red, past performance is not necessarily indicative of future results. Okay. It has to be talked about. So I'm just letting you know. We have to say that too. And yeah, it takes care of that slide. Okay. So again, it's not a great way to start a webinar. But again, I'm advertising the fact this is a eyes wide open approach to trading, and it starts with this. So we won't take it lightly. It should be discussed, especially if you're brand new, because I know as a rookie, I know you're getting the emails and the advertisements and all the marketing stuff that's out there. And you know, you can, a lot of times you get hypnotized by that stuff, and what happens is your eye is on the prize, but you don't really realize what the risks are to get those type of returns. Well, this disclaimer outlines it. That's what we're talking about it. All right. Second slide is my relationship with CFRN. Okay. So Bert works for Daniel's Trading. That's who I am. Okay. As I said earlier, I support this. I support the DtPro Trading Platform. That's what you're looking at now. And the indicator sets are built inside of it. So with a few left clicks, you can literally just put the indicators on and light the match. It's really that simple. Again, if you're fumbling around with the platform and the indicators, you can always call me, and that's an advantage to you. Okay? That's who I am. I represent. If you decide you're going to go down that path and you're going to use DtPro, then I also handle the brokerage, the execution, customer service when it comes to the trading aspect and opening up new accounts and stuff. So I handle that side too. The flip side of this is that we have CFRN. No, Michael and Dwayne don't work for CFRN. Bert doesn't work for CFRN. CFRN doesn't work for Daniel's Trading. It's their trading tools. Okay, it's their indicators. They're the educators. They're third-party trading advisor. Okay. There's a line in between us, and that's what I have to talk about. Okay, there's no commingling of anything. If you decide to go down the CFRN path and push the PayPal button, that's between you and CFRN. If it's videos on their website, or the Thursday night workshops, or the Logic 247. Yeah, where am I going here? I don't even have it up. If it's Telegram and Logic 247, okay, you would reach out to them directly, okay? If it's, like I said, about the platform and execution, that part, just reach out to me, okay? So a lot of times, you know, Dwayne's doing the radio program in the afternoon. Mike's, you know, after the 2-hour training room, he's running around. A lot of guys will just reach out to me, okay? I can always text them and say, hey, give them a call, or, you know, I can always get in touch with them. So, you know, just because we're separate doesn't mean we don't communicate, talk. If you feel like, hey, I need Mike or Dwayne to call me, I have an issue, Bert, can you get a hold of somebody? You know, that's fair game. Also, Valerie was added to the team, and she was added almost a year ago, maybe 6 months ago, 8 months ago, and she's really good. Okay, she answers emails and gets back to people. So she's another contact person. All right. So, like I said, not a great way to start the webinar, but again, we have to talk about these things. It's good to talk about them. We don't like to shy away from them. Eyes wide open, and that's why I do it. I've been around too long not you know, we should talk about that stuff, especially if you're brand new. All right, enough of that, right? Let me get a sip of water, and then what we'll do is we'll break down talk about the trade setup, because those guys that are brand new, this is the syllabus, your cheat sheet. This is what you're going to lean on. Okay, so what I'm going to do is going to break down each point here, each step. Okay, and then hopefully that'll, that you'll be able to grab some content from that, absorb it, and then when you're in the training room in the morning, when Mike's talking about the BPC or the bullish bearish cross or the pullback, and the divergence and the separation, you're not standing there going, what is he talking about? What's all these squiggly lines? He's pushing buttons. I'm totally confused. So hopefully we can take care of that with, probably take me 10 minutes to do this. Okay. So first order of business, the time frame. We are on a 4-tick range chart. Okay. Chances are you're on a time-based chart. Okay. If you're following logic, you're on a 30-minute chart. You might be on a 5-minute chart. The idea is to get into a 4-tick range chart. So if you're using DtPro, just in the left-hand corner of the chart, see where it says 5 minutes, just hit the drop-down box here and go down to custom. Select range bar and make that one and make it look like a 4, and hit OK. Right now you're staring at the SP-emini on a 4-tick range chart. Okay, why the 4-tick range chart, Bert? One of the reasons, and Michael advertised this in the room, is that the height of each candle is 4 ticks in height. Okay, that does not change. Some of the candles are bigger and smaller, but in the end, they're all the same size. Okay. The reason that is being used, one of the reasons really, is Mike can be proactive. With time, you'll be able to do this too, but be proactive, because if he knows the height of each candle is going to be 4 ticks, okay, he can be proactive. So what I'm saying is, here's what you're going to hear. You're going to be in the training room, and Michael's going to start calling out some highs and lows of like a current candle, like this one here. He'll start calling out highs and lows. What he's getting ready to do is getting ready to place an order in advance. So what he's going to end up doing is, if this is the current market price here, he's going to end up putting a buy stop above the current market price or a sell stop below the current market price. All right. He can do this because he knows the height of each candle. Okay, so he's being proactive. Okay, so the idea is, if the market takes off, okay, he's going to get stopped into the position, and he'll be able to take a ride if the market has a lot of momentum. And on the flip side of that, if the market breaks down, hey, he's going to get stopped into the position. And hopefully, if the market and the momentum gets weak, he can take advantage of it on the way down. Okay, that's his way of getting into the positions. Okay, back in the day, when it first started, people were going, man, how did you catch that? There was no way you caught that run. And so it had to be, we had to take a few moments to say this, well, this is how he's doing it. Okay, he's buying it on a stop, and he's either, or he might be selling it on a stop. Okay, so it looked like this. Right click, selling it on a stop. Okay, or he's right clicking above and he's buying it on the stop. Okay, so if he does that, okay, this isn't going to get filled until the market gets up there. Okay, that's what that means. You know what? Let me get out of live mode here. Okay, I'm in demo mode. All right. So that's the explanation for the most part for the 4-tick range. Okay, one of the big traps that people fall into is that they will go down to the custom. They get the pop up, but they'll go to tick bar. They make that 2 look like a 4. Okay, if you're staring at the same ES chart, it's going to look something like this. Or if you go to crude oil, it looks something like this. Okay, it's got to be on the 4-tick range. That little R in parentheses is the tip off. That'll let you know, hey, you're on the right thing. And you can tell the difference. It looks, it looks a lot smoother. Okay, so the idea is to get on the 4-tick range chart. Okay, all right. Now we're going to talk about price action. All right, so some buzzwords that you'll hear. This red and blue line is referred to as the MA1. Okay, nothing fancy about it. The green line is referred to as the BBC. That is short for bullish and bearish cross. Okay, so together, the MA1 and the BBC, okay, that makes up step number 1, okay, which is this. When the MA1, that red and blue line, crosses the green line, that's the cross. That's the first step. That lights the match. If the MA1 is red, you're looking for shorting opportunities. If the MA1 is blue and crossing the BBC, you're looking for buying opportunities. So the one that's highlighted here is a bearish cross. Why? Because the MA1 is red. You're looking for shorting opportunities. Okay? So no, I didn't say go short, go long, go short. I said we're looking for opportunities to go long and short, okay? Because that leads us into step number 2, which is this. After the cross, okay, whether it's a bullish or bearish cross, okay, and then MA1 crosses the BBC, the normal thing for the market to do is to gravitate toward the BBC, okay? So what you're doing is you're looking for the market to challenge or touch that green line. Okay, but not only that, okay, you are going to look for a close in the direction of the trend. So if we have a bearish cross and then MA1 is red, you should be looking for a red candle. Okay, if we have a bullish cross, okay, let's see here. If we have a bullish cross, let's see if I can't find an example here real quick for you. If we get a bullish cross here, then what you're looking for is a blue candle, okay, a touch or a green candle, okay, a close in the direction of the trend. If you stare at the ES chart right now, we had a bearish cross. The MA1 is red. The normal thing for the market to do is pull back to the green line, which we did here. We're looking for a touch and then a close in the direction of the trend. So you're looking for a red candle. Okay, so that's what you're looking for. Okay, so that is step number 2. Now, in some cases, when the market has so much bullish or bearish momentum, okay, it's not going to get to the green line as it does here. Okay, it may make an attempt and then just fall apart. Okay, well, what you're going to learn and what I'm going to teach you and what you want to do is get in the habit of drawing trend lines. Okay, because you never know if it's going to get there. Okay, and if all the rules apply, if it doesn't get there, and we do break that trend line, you're actually going to get inside the DOM, that tower where we buy and sell, and take action. Okay, that's what we're going to do. So you're going to hear me labor over drawing trend lines, okay, developing good habits, okay. So if that does happen, again, you're in a position to take action. Okay, that's the idea. After the fact, you don't want to be fumbling around trying to draw trend lines after the fact, because you're just going to miss some opportunities that way. So you have to really organize your hand-eye coordination and get in the habit of drawing trend lines along the way. And that takes practice and that takes time in the simulator. That's why CFRN preaches, being in the simulator, building some confidence and being consistent. So that's step number 2. Okay, step number 2 is pull back to the BBC, but we're also looking for a close in the direction of the trend. Okay, a big question I always get is, well, why don't you just place an order right there? Okay, why do you wait for the close and maybe lose a few ticks or possibly miss a trade? Because sometimes the market does this, just blast right through the green line, blast right through the BBC. So what you're doing is you're sacrificing price for action with that bar. They would like a little like a tip. Hey, you know what? Maybe we are going to go down. Maybe that's it. That extra step as that little variable that says, you know what? When this is happening, step 1 and step 2 is happening, and now step 3 is in play. Man, these are all the clues that, you know, you need to take action. So that's why you do it. You're sacrificing price for action with that down close, okay? And you avoid a potential stop out. All right, now we're going to focus our attention on the slingshot, because when step 1 is in play and then we get step 2 going on, then our eyes are going to focus on the slingshot, which is the oscillator portion of the chart. And basically, this is where the trade exists. It's all happening down here, and I'm going to show you why in a second. But to break it down here, the red and blue line here is referred to as the cycle, okay? And the green line, well, it's just the green line. But the separation between the green line and the cycle is what Michael is talking about in the training room. He's talking about divergence or separation, okay? That is what you're looking for, that separation right here that's highlighted. And here's the scoop on this. Cycle is telling us, look, in the NASDAQ, the 4-tick range chart, the momentum is bearish. It's bearish because the cycle is what color? Red. All right? We have a bearish cross, and we have a down close, and that's red. That cycle should also be red. When everything's the same color, you stick all the probabilities in your corner on the trade setup, just so you know. All right? So what this is saying is, look, the momentum's bearish, okay? And then with the green line pulling away from the cycle like a slingshot, okay, together with the price action up here, which is normal, okay, what it's saying is, look, this might be just a pop-up, just like an air pocket in this ongoing downtrend, okay? So we have the momentum's bearish, okay, but market's going up. The market did the normal thing, but closed in the direction of the trend. Well, that's good. And we got this divergence, or this separation, okay? That's what you're looking for, okay? So that is step 3, okay? The pull away or the separation, okay? Because when that happens, when all the variables are set in motion there, next thing you're going to do is you're going to go inside the DOM, and you're going to left click and get short. That's what you're going to end up doing, okay? And take action. Because when that happens, here's what we expect to happen in the end. And this is why the trade exists down in the slingshot. Market's going to go up. It's going to tag that green line, and it's going to close in the direction of the trend. You're going to like, all right, I got step number 2 in play. And then your eyes are going to gravitate toward the slingshot. You're going to say, holy smokes, I got divergence. I have that separation. And the cycle is red. Man, I got everything's the same color. What happens is, the normal thing for that green line to do is pull away and then get back into the cycle and close the gap. What price is going to do, it's going to make a new pivot low along the way. It's when these two intersect, the green line and the cycle, this is the point where you're going to cover the trade. You're going to get out right here, okay? Why? Because the normal thing for this green line to do is pull away, get into the cycle. Pull away, get into the cycle. Pull away, get into the cycle. Until the momentum turns, it's blue. Now we're looking at bullish momentum, right? And then you're looking for the green line to get underneath it. Pull away. Pull away. Okay? So what you end up doing, end up selling this top, selling this top, selling this top, buying this dip, buying this dip. Take profit here, you're going to take profit here, you're going to take profit here, you're going to take profit. You're going to take profit every time that green line is getting into the cycle. Okay? So that's why the trade exists down here in the slingshot. All right? As long as the market is trending, Okay, if there's something you're gonna put on the top of a piece of paper right now, here it is. The market needs to be trending before we push any buttons. Okay, that's what we're gonna end up doing. So that market, if you're looking for a bearish opportunity, the market better be doing one of these. If it's not, I'm not going to push any buttons. We start getting this bullish momentum, right? Then the market should be doing one of these. Okay, it should be making higher highs. Okay, so you're going to notice one thing you'll see. The first thing that we do when we go to a different chart, to a different chart, to a different chart, the first question I'm going to ask: are we trending? That's what you should be doing every time you start a chart. Are we trending? Okay. Next step. Do we have a cross? Yes, we do. We have a bearish cross. Okay. Look for step number 2. Look for step number 3. When they all apply, you get inside the dome and take action. Okay. So that's the setup. It's right there. Okay. Every trade has an 8-tick stop attached to it. So if you're a rookie, brand new, if you're trading the gold or the crude, if you're dead wrong, you're risking $80 a contract. If you're trading the S&P 500, the mini S&P, it's closer to 100. If you're trading the YM, it's closer to 40. And the euro currency, I think it's $40 too. Okay, if you're dead wrong. Okay, that's the setup. In the end, here's what you're signing up for. Okay, you are not going to learn to pick the top or the bottom. That's not what you're signing up for. You're not going to learn to trade it from point A to point Z. You are going to learn to take a piece out of the middle. Okay, and along the way, you're going to learn aggressive risk management. You're going to trail the stop, trail the stop, trail the stop, trail the stop. Okay, until it's time to get out of the trade. When do we get out of the trade? Like I said earlier, when that green line ultimately gets back into the cycle. Okay? You're on a 4-tick range chart. We're looking at the market under a microscope, so that means you're going to have to be in front of the screens. And you'll have to be, it's rules-based, so you're going to have to be actively engaged in what's going on. Okay? So you're going to be tied to the computer. All right? You're going to be scalping. Because you're using aggressive risk management, there's going to be potentially a lot of trades. Okay, you might get frustrated where you're getting a lot of break-evens, plus one, minus one. Okay, in the end, what you're looking for is that runner. Michael doesn't use targets. Okay, because if you get into a trade and you get a runner. Okay, you want to ride that runner until that green line gets into the cycle. All right, so you're signing up to scalp. That's what you're signing up to do. Okay. All right. Now we covered that. We'll get into the live markets. All right. Let me minimize this. All right, so here we go. You know what? Let me move the question box over. All right, so here we go. As I said earlier, the first thing that we're looking for, are we trending? Is the market making higher highs or lower lows? So I'm staring at the ES, and what I see is a lot of sideways action, okay, right now, back and forth. Here's what I want you to do. I want you to get in the habit of hitting this zoom out button right here. Zoom out, zoom out, zoom out. Okay? This will allow you to see what's going on the left-hand side of the chart. Okay, you'll get a bigger landscape of what's happening. Okay, then you'll be able to see whether we're trending or not. Right now, we're seeing a little bit of sideways action, right? This, well, that looks like trending action. Okay? So if you get in the habit of zooming out, you'll see a little bit more of what's going on. Okay? A lot of times what I see people do is their charts are blowing up. Okay, here's one of the first traps that people fall into. They get caught in a sideways mark and they don't even know it. And the reason is because you're so used to seeing Mike's charts, right? He's going to have 3 or 4 or 5 charts floating side by side. They're blowing up pretty good. So you might see something like this and say, hey, this thing looks like it's trending. But if you just take a few minutes to zoom out, okay, you might find out after zooming out, man, we're just sideways, all right? So that might make the difference between being in, avoiding a stop out. So strongly consider that zoom out button, okay? If you're not sure about whether we're trending or not, dynamic support and resistance, okay, is a good clue. If they're side by side, that's a good indication we're sideways. We're just inside a range, okay? So what that means is, okay, see if I can erase this. I wouldn't get excited in getting short until we took out dynamic support or this dynamic resistance level. I wouldn't get, we'd have to trade north of this level here or south of this level here before I would start thinking about doing anything in the ES. Okay, that's what that means. Okay, so right now, ES is not trending. So we go to the next market. Go to the crude oil. Are we trending? Okay, yeah, we are. Before we weren't, right? As I said earlier, if you're not sure, dynamic support and resistance will also tell you. Notice how they're side by side. Also, top here, okay? As I said earlier about the ES, I wanted to wait for it to break dynamic resistance. Well, the crude did it here, right? So now we're trending, all right? So we do have a trending market. We have a bullish cross. That means the MA1 is blue and crossing the BBC. So your next order of business, as soon as you get step 1 or that cross, is to go over here to the left-hand side and engage the trend line. You're going to see Michael draw a ton of trend lines in the morning. Okay, so you need to get in the habit of doing that. So as soon as you get that cross, engage the trend line by left-clicking on it and start drawing. Okay, that's how your trend line should look. All right, what is the normal thing for the market to do after the cross? Pull back to the BBC. Okay, let me stop right there. We're looking for the market to pull back to the BBC. Because we have a bullish cross, we want to be looking for a blue candle. This is step number 2. That is the first up close. Okay. Now a few things are going on right off the bat. All right. So this is step 2. So our eyes gravitate toward the slingshot. I said earlier, when everything is the same color, that puts all the probabilities in our corner, right? The first up close here, that's a red line, right? That's a red cycle. Okay. Number 1, when faced with a different colored cycle, a trend line is required. Okay. Not only is it required, but a close above that trend line is also required before you take action. Okay. So if you get in the habit of drawing the trend line in advance, it's going to be there. So if it does happen, you're in a position to take action, go inside the DOM and left click. That's why you develop those habits. Okay, so you're drawing the trend line. The trend line is required because the cycle is red. Okay. Now, ironically, 2 things are happening here. The third thing is Mike Bork is texting me, so hold a second. Other 2 things are happening here. Number 1, look at the slope of the cycle. Not only is it red, okay, it's a different color. That means it waters down the probability, right? but it's also down at a 45-degree angle, right? Okay, that's another disqualifier. Okay, when you're faced with a different colored cycle and it's sloping at a 45-degree angle against you, no trade. That's a disqualifier. Okay. The other thing is the black step line piercing the BBC right here. That's the other disqualifier. Okay. If that happens, no trade. The third, okay, which we discussed earlier with the yes, not trending. Okay. Not trending. We don't have a trend. We're not pushing any buttons either. Okay. So 3 things that really can disqualify trades. Okay. It'll take time for those to hit you in the face a little bit. Okay. That's why you're in the simulator. That's why you're practicing. Okay. All right. 1 second. Let me tell Mike to pull off here. Okay. So ironically, you know, the market was trending, which is cool. Okay, we identified that. We had the pullback to the BBC, but then we got hit with, you know, 2 disqualifiers, which is good because we were able to talk about it in one chart. So for the moment, we're not doing anything with the crude. All right. So I'm going to get rid of the trend line. Let's go to the natural gas. First thing we ask ourselves, is it trending? Notice the first thing I ended up doing without even saying anything is I hit the zoom out button. Okay. Again, I look at this. All right. Okay, I see a bullish cross here, right? MA1 is blue, crossing the BBC. The normal thing for the market to do is pull back the green line. There is first up close, right? What color is the cycle? It's red. That means a trend line is required, and a close above the trend line is also required. But again, notice it's got that 45-degree angle. It's moving against us. That's that big fat disqualifier. And look, the black step line is also piercing the BBC. But also, if you take note, as I said earlier, a good habit to get into is to hit the zoom out button, right? Notice there's some stiff resistance back here, right? I mean, look at the reaction off that, all right? It doesn't surprise me. You know, we had some kind of the same reaction there, okay? So right now, are we trending the natural gas? No. Okay, we got a double top in place here. We got some dynamic resistance here. Support and resistance dots are side by side. So right now, natural gas is off the table. So we are going to delete the trend line.
I'm not going to unlock them.
Let's go to the gold market. Okay, zoom out, zoom out. Right now, the gold sideways too. Okay, we got in the low here. We're at dynamic support building. We're right back in the middle here. A lot of sideways action there. So no action. So nothing to do there. Let's go to the ES. Okay, I said earlier I wouldn't want to take action until we got above dynamic resistance. Okay, we have dynamic support. If I zoom out, that bothers me because we stopped at the old top. Okay, but here's what I'm going to do. So right now I wouldn't touch anything, but I want to show you how to do something. I want you to show you how to enter a trade inside the Dow. So we're gonna play it anyways. Okay, so we have the bullish cross here, right? MA1 is blue, crossing the BBC. So we activated our trend line and we started drawing. Okay, we have a little bit of divergence here. Okay, the cycle is blue, so that's good for the home team, and the green line's underneath there. Okay, if we get a close above this trend line, okay, then there's potential action to take. Okay, but the normal thing for it to do Normal thing for the market to do is to gravitate toward that green line. So let's see if that happens. Now, if it does, what I'm going to end up doing is left clicking in the green. Okay, I'll end up left clicking. And if you notice, check this out. Notice how they hit this little tinkertoy triangle on top of the DOM. Bottom of the DOM opens and closes. What I'm doing is, if I left click on it, I can create a bracket order. What that allows me to do is it'll automatically place a stop loss behind me as soon as I get into the trade. Okay, so if I left click on buy stop and left click on sell stop, just those two buttons there, and I right click over it and put factor in ticks, just make those look like 8s. Okay, why? Because every trade has an 8 tick stop attached to it. What it'll do, see that? Not only will it get me into the trade, but it'll also put the stop loss in right behind it, 8 ticks away. So I don't have to push another button. All right, that's called a bracket order. Michael's using those all the time. You're going to use them. It's one way to create some discipline. Okay, and I'll show you how to trail a stop if this thing qualifies. Okay, so we're looking for a close above the trend line. No, the trend line is not required. It's not required because the cycle is blue. So why am I drawing the trend line? Because we don't know if it'll get back to the BBC. Okay, if it closes above that trend line, then hey, this thing has a lot of momentum and we want to try to jump on it. Now here's that example that I was talking about, Michael being proactive and the advantage of having a 4-tick range chart. If the low is 30.19 1/4, then the high has to be 30.20 1/4. So what Michael would end up doing is right clicking and creating a buy stop at 30.20 1/2. Okay, that's what he's doing. Will 30.20 1/2 be above the trend line? Yeah, it would. It put us right about here. So it does qualify. So we'd have a bullish cross. Okay, we'd have a close above the trend line. We'd have some bullish divergence developing. Okay, and I know some of the others, the CFR members in here, are going to note this would be a potential momentum trade. Okay, just ignore that from now. So the CFRN guys, ignore it. Okay, nobody's going to push any buttons right now. Okay, and we're not doing that because, as I said earlier, I wanted to get out of this box here. Okay, I lied to you when I said I wanted to take action above this. I didn't see that top there. All right, so it's doing the normal thing. Okay, so let's see what happens. So I'm going to cancel the order because we did make a lower low. So if the low is 19, then the high should be 20. So I'm going to right click at 20 1/4. That would be above the trend line. Okay. I'm going to cancel the order again. Why? Because now we hit the BBC. Okay, so now the low is 1875. If it gets to 1975, okay, we get long. The cycle is blue, and the trend line is not required. So here we go. Might get it right here. This is the entry right here. We're just waiting. That's the entry. Once that gets executed, our stop will be, okay, so that's the up close, right? There it is. So that was the up close. That's our entry. Here's our stop loss. It's 8 ticks away. Okay? So worst case scenario, if the market does an about face here, we lose $100. Okay, as outlined right here. All right. So the rules of engagement, the money management part, right? If it goes plus 4 ticks in our favor, all right, that would put us right here. or closes on the other end of the other side of that MA1 right here, that's the MA1, that buzzword, okay, we will move the stop to break even. As silly as it may sound, what is break even? You get a lot of questions of that. That would be your entry price. So the way you do this really is you just left click over the one here, leave your mouse clicked, and just drag it. So watch. Drag, release. Drag, release. That's all you have to do. What I also would add, everyone should have this working orders tab open. Okay, trading, positions and order management, working orders. Should have that open. All right, notice that's where our stop is, right? 3018 matches this. When I move this, so does this price. Okay. So right now we're long. I'm going to stop at 18, and it's right here. When we get out of the position, this box should be blank. Okay. If there is something in there, you got something working, and so you just have to cancel all button. Okay, you got to get rid of it. That's why you should have this box open. Okay, because at the end of the day, when you close out the platform, you don't check this box, you have a stop or something loose, you're vulnerable to, you have some exposure, right? All right. So I have that box open. So right now we're just waiting for the market to cooperate. Okay, so let's see what happens. All right, so again, highlight we just did, bullish cross, MA1 is blue, crossing the BBC. We engage the trend line because that's what Bert told us to do. The normal thing for the market to do is to pull back to the BBC. We wait for the touch and also the close in the direction of the trend. In the process, we are drawing a trend line. We're doing it for two reasons. Number one, we don't know if it'll get down here, right? And number two is if this thing turns color on us, if it turns red, well, the trend line is required, right? So a timeout here. The cycle was blue. It's got a great slope to it. We have some separation. We got a lot of pluses going on with this trade. The trend line is not required, okay, because the cycle is blue. All right, so what we can do here is just do that and get rid of it. Okay. Now we're just waiting. Okay. We place the order by left clicking in the DOM. The stop loss was automatically placed 8 ticks away because of this bracket order option. Okay, and I showed you how to put the bracket in. So the rules of engagement is if the market moves up in our favor 4 ticks, we're going to drag the stop and move it to our entry. And in the end, the normal thing for the market to do, or this green line to do, right, is to pull away and intersect with the cycle. And what the market should do is make a new pivot high. And when everything comes together, okay, this is where we close out the trade. All right, so that's what we're waiting for. The only warning flag that I put on this is by zooming out, I noted we have a double top, so we got to be careful. But I wanted to get my hands dirty a little bit and show you how to get into the DOM and place an order. Okay, so let's see. This could really be a big move because it's like barging down a door here. We got up here about 2 or 3 times and we weren't able to barge through. We get through here, this could be one of those runners. So, but it's not surprising we're struggling because we're not trending. Okay, we're sideways here. So let's see. Yeah, it's one of the big traps that people fall into is they get caught in a sideways market. They just don't even know it. It's not your fault. You're looking at the market like this, and if you just do one of these, you might find, oh, you know what, we're kind of in a sideways market. But one of the rules and things I'll tell guys, look, it's got to be easy and obvious. If you're not sure about it, just don't push any buttons. Okay, making higher highs, lower lows. It's got to look. There shouldn't be any guessing. It should be automatic. Oh yeah, making higher highs, lower lows, left click. If you're wondering, it's is this trending or not? If you have to ask yourself those questions, and then don't do anything. All right, so instead of watching paint dry, let's go to a different market, see if we can't find something else. Okay, here's that crude oil again. Sideways at best, so we'll move on to the currencies. Let's go to the euro. See, to me, right? Double bottom. Okay, you get a little bit of trending action here. Okay, that concerns me here if you're looking at the euro, because now we have a double bottom, right? Not only that, the cycle is blue, and it's got that 45-degree angle against you. Okay, the market did do the normal thing. Okay, the market did pull back to the BBC, and we did have the down close, right? That's the candle that gets you excited. But again, this is no good. Okay. British pound. It's back to the BBC. Okay. Zoom out, zoom out. Are we trending? We do have a lower low here. And we got stopped out of the ES. Okay. So that's why I told you not to push any buttons, because that's the trap that people fall into. They had all the ingredients of going up, but the fact that we weren't trending, okay, that's the difference between making and losing money right there. So just zooming out, okay, makes the difference between a winning trade and a losing trade. Okay, that's a good example of it. So let's go back to the currencies. Okay, the British pound is at the BBC. I'm going to draw a trend line underneath the candles. Backed. Should look closer. That. Okay. Are we trending? We have some lower lows here. I'm concerned about the green dots. Okay, dynamic support right now. Okay. So again, it's one of those trades that is not so easy and obvious. Okay. What was good about it is we have some separation. The green line is away from the cycle. We got a lot of space here, right? We need the down close. And not only that, guess what's happening? That cycle now is turning blue. So a close below this trend line. Number one, the trend line is required, but number two, we're going to need a close below this trend line before we can take action. Okay? So again, the reasons why we draw trend lines, we never know if it'll get to the BBC, as it does here, right? And number two, the cycle. We draw a trend line in the event the cycle turns color on us. And when it does, the trend line is drawn, and then a close below the trend line is also required. Perfect example of why we have to do that, right in the same chart. All right, let's go to some of the other currencies. Got the Swiss franc. Zoom out, zoom out. Double top here, not trending. Again, a perfect example. Okay. drawing the trend line. The Canadian dollar, obvious bearish cross there, bearish separation, the good slope. Okay, we did make a lower low here. I would caution you here with the Canadian. Even though we poked a head underneath it, we basically regained support right there. Okay, so right now that's not one of those easy and obvious ones. But what I do like is that it's a good example of step number 1, and it's a good example of step number 3 where we have that separation. Okay, so it's got some quality there. It's lacking that easy and obvious look that we're kind of looking for. Okay, so hang loose. Crude. Hey, crude is making some higher highs. So crude could be setting up to go up again. So I would put crude on your radar screen. Let's see what happens. We really didn't. Yeah, we spent some time over here, but I'm not. I want to see more energy than this. See if we can find something else before we hang up here. The gold is just dead, so there's nothing to do there. The Dow. Hanging around here too. All right. That's what I was afraid of. We kind of just spin our wheels here this afternoon. But the good thing is we got to talk about a lot of good things. Okay, we went through the trade setup. Okay, so the guys that are brand new, this is your cheat sheet or syllabus. Okay, I think some of the markets gave us there was some meat there, but nothing that really was easy and obvious. The good thing is,
so what was the transfer?
The takeaways today, here's what I would do. The takeaways. Trending. Make sure the market's trending. Okay? Get in the habit of hitting the zoom out button. You'll get to see a little bit more of the landscape of what's going on in the market. Okay? This was a perfect example. Okay, here's a market that had all steps 1 through 3. Okay? You're staring at this, you're staring at something that might be trending. But if you zoomed out a few times, you would have found out, hey, maybe we're just stuck in a range. Okay? So get in the habit of that zoom out button, get in the habit of drawing the trend lines after the cross. When everything's all the same color, that's all the probabilities in your corner. The other side of it too is it should be easy and obvious. Okay? If it's not, then don't push any buttons. If you're not sure about it, don't do anything. Okay? And those are the takeaways. Okay? We do this every Thursday. Sometimes the markets cooperate. Sometimes it's a dud like today. Okay, so the idea is really to go over the habits and look for the screen time is important. Okay, learning the personalities of markets that we're trading. Okay, going over the setups over and over and over and over again. Okay, that's the idea, and then you're kind of training yourself to be a robot. Okay, so. All right, we do this every Thursday for an hour. Okay. If you have questions, give me a call or shoot me an email, and I'll see you guys in the training room in the morning. This is recorded. I'll decode it as soon as it's done, and then I'll throw it out on YouTube so you guys can review.